So this week, China announced massive stimulus. So we had the Federal Reserve do a 50 basis point rate cut, and that affects the global currencies and global growth. And then China comes in with a polite bazooka and sends their stock market just through the roof. And how incredible, what timing, which was September 18th, which was 2 Wednesdays ago. We did a whole segment on what are these huge funds buying. They're buying Chinese stocks. And then we applied the trend roadmap. So today, what I really want to do is definitely not to say like we called it. There's a million things that we get wrong. But what I want to do is just show you how the trend roadmap works. So if you filter information, you filter it through the trend process, follow the trend. How has it worked? And maybe also share with you some other really interesting ideas that are coming across my plate that could be maybe what's next. So let's dive in. Here we go, and welcome to the Invest with Rules Week in Review. That's the first time I've ever said it like that. So, all right, so let's start talking about September 27th. Market update. We're going to do a review. We're going to review big funds buying China video on 9/18, do a before and after. And then we're going to do next week. I'll do a sneak peek of that in today's video at the end. So definitely stick around with me. Before we do world's quickest disclosure, this is just information, not a direct solicitation to go buy or sell anything. Please always manage your risk, manage your financial plan, manage your stops. There's still, no matter what happens, there's always a lot of risk in this market, despite stimulus coming from global economies. This is Invest with Rules, where we follow the trend, we follow big money, we follow risk management rules. Again, thank you for being a member. This is for self-directed investors. If you have questions or a topic you'd like to see us cover in upcoming videos, email me, hello@investwithrules.com. If you're finding, unfortunately, that you just don't have the time, you're missing signals, you're missing kind of bigger picture items. Just again, we do offer a service that provides a lot more once you've gotten through the process, a lot more time freedom and financial advice. Email us at hello@iwradvisors.com, a totally separate business. Okay, so first, what I want to do, Invest with Rules, is share with you the trend roadmap and just how to think through this, because then we're going to go through our examples. So overall, we have four stages, which are kind of coined from Stan Weinstein's famous book, How to Profit in Bull and Bear Markets, the secrets to how to profit in bull and bear markets. I've unveiled some of how we do it and our proprietary method. So as an example, after a horrible downtrend, you have a basing period. Basing we'll call a U-turn, where the short-term trend is up, the long-term trend is down. That is this U-turn area where we want to deploy capital. So we do Invest with Rules. So when you're thinking through our process, we do enter trades, half positions or partial positions on U-turn signals. It's something if you want to get in early. That's a U-turn signal, whether you're a short-term or a long-term investor. Okay, let's move to stage two. Stage two is this advancing phase. This is where all the glory and all the fun happens with investing. This is where we have gas signals, where we have the weekly and the daily, or let's say short-term and long-term uptrends. We are cautious on overheats. We're a little bit more patient, but this is where you will find the most glorious experience investing. So again, gas signals is what we're looking for. If you wanted to get in early, it's a U-turn signal. And then finally, eventually the markets turn into what's called a topping phase. We'll call that a coast. A coast is where a short-term trader would start to exit a position. A coast is where a long-term investor, in theory, would just coast, would just hang out. The short-term trend is now down. The long-term trend is still up. The party's not over. The question is, do you go into a stage 4 decline, break signal, where you have both short-term, long-term down, or do you move back to a gas signal? So long-term investors would sit through some of that stage 3 topping, short-term traders would not. So let's look through we're going to go back in the time machine, not too far. Today's the 27th. We're looking at the 18th. So a Wednesday ago, Wednesday of last week. So I shared this article. David Tepper, he owns the Carolina Panthers, for all you football fans. He and a big short investor, Michael Burry of Scion Capital, they're quietly upping their bets on the Chinese economy. And very simply, what we did is we went through our Trend Roadmap 2.0 model, looking at things like Alibaba. And we looked at things like JD.com and KE Holdings and large cap China ETF and the China Tech ETF. So globally, I was a little bit cautious. I own international stocks. I own international bonds at the moment through our Invest with Rules process. But overall, we're in a deflationary bust, is why the Chinese stocks were down so much over the past 2 years. So, what happened? So, what changed this past week is China's central bank unveiled the most aggressive stimulus package since the pandemic. What on earth did they do? They lowered their policy interest rates, signaling more rate cuts to come. They cut rates on over 5 trillion in mortgages. They eased rules for those that want to pick up a second mortgage. They lowered what the banks need to keep on their balance sheet for their reserve ratio, freeing up more fresh liquidity for more loans. They pledged $100 billion to support the stock market. They stated that policymakers were studying a stock market stabilization fund, like a plunge protection team. So, whoa, right? Huge opportunity. Obviously, it was a massive thing going on. So, what does this actually do? Is it throws the Chinese economy from a stage 4 deflationary bust, and it potentially throws them really fast into an inflationary boom. Is that's why the market's done the best kind of week in 10 years. So we're going to go back, and the whole goal of this is to, again, we're all going to get things wrong. We're all going to use our stop losses and our protective capability to protect ourselves. But how can we use our tools that we give to you? And if you have a Trend Roadmap 2.0 ticker, amazing. If you don't have one, please email us hello@investwithrules.com. We'd love to give you one. We're just kind of slowly working through and grinding and building them. So 918, here's a chart of Alibaba. Again, if you'll see on the top, 918, we're just simply going to focus on the last video. If you want to go back to that video, we'll focus more on the trends today. So when we saw this, I said, short-term and long-term uptrend on a gas signal, things look good. So now I'm going to show you the chart today or this morning. And the purple upward-facing arrow right over here is last week. So I said gas signal looks good as much as quad 4 deflationary bust look good. And obviously it's choppy as can be over here. That's totally normal over a 60-day window. But it looked good, and wow, right? I mean, talk about a move. BABA, Alibaba now's on an overheat, but just the whole goal of this is look at how the trend roadmap was here to help. Okay, let's look at JD.com. 918 was a gas signal as well. So even before all of this, the trend roadmap said gas on Baba, gas on JD, and wow, from 26 to almost 38 bucks on JD.com, the internet retailer. Obviously now it's overheated, so you're waiting for a pullback if one did not partake. I did talk to some members that did say they did partake in Chinese stocks, so that is totally awesome. I greatly appreciate you being a member. I don't expect this is your capital, your decisions, but I hope this is all able to help you move the needle, at least kind of get you over the curb of our newsletter cost, and then kind of just it's all gravy after that point. BEKE, KE Holdings, which is a real estate development company. It was on a break last week. And then the day after this video aired on 9/19, it turned to a gas. It paused for a minute on a pullback, and then wham, up it goes. So it went from $15 to almost 20 bucks, not too shabby, on an overheat. So again, when the news comes out, it's usually too late, and the trend roadmap is stamping it's too late. Now you're waiting for a pullback. Okay, let's look at Baidu. BIDU was on a U-turn, so in our world, if one wanted to, that would be a partial position. Obviously, the partial positions in the recent term wouldn't have worked, so you kind of like partial position, exit for a flat trade. Partial position, exit for a small loss. Partial position, you have just made up for all your losses and now you got lots of gains. So here is where the video came out at 84 or 85 bucks. Now you're sitting at 106 on an overheat. And it never really gave you the gas. It would have, in theory, gave you the gas in the morning. Kind of funny to think gas in the morning, but it would have given you a gas signal. And then by the end of the day, as the stock ripped throughout the day, it would have flipped to overheat later that day. So again, morning, afternoon, it's totally based on your preferences of when you operate in regards to make your trades. So Baidu is overheated. FXI. So now we're going to look at the ETF baskets. This is the top 50 stocks in China FXI. That was on a gas signal before all this started on 9/18. It was at $26. Now you're sitting at 32 bucks. It's on an overheat. FXI overheat. I mean, look at that rip. I mean, I'm just, again, we're really happy and we're really, I know Mike puts in so much effort into these ticker tools and the engine and the signals. I know it's proprietary, but we're here to help and give you the results quickly. And then on the ticker tool 2.0, we give you a list of at least 10 tickers you can throw in there so you can kind of go quick, which is awesome. It's on a different tab at the bottom. But in general, FXI, I mean, that was pretty sweet. And then KWeb. KWeb on 9/18 was a U-turn, so I think kind of partial position. And then the very next day on 9/19, it flipped to gas. So it went from 25 to 26, and now you're looking at 33. So pretty wild. Again, overheat. So trend roadmap 2.0. There's a short-term signal, short-term, and a long-term signal. Uptrend, uptrend. I mean, you couldn't ask for anything more. It's just now, it's just you're waiting for pullbacks if one wanted to enter. The opportunity was there. I'm thrilled that we covered it. And I kind of think through of like where I want these videos to go. I want to shoot more videos with Mike. It's fun to have a two-party system to have kind of a conversation versus just a dialogue or a monologue. But in general, I want to share these ideas hopefully before they explode higher in a perfect world. That's not always perfect, but a sneak peek for next week. We have the billion-dollar fund manager analysis around the corner for us, so we'll be working hard on that for you. But I think as we move, the US economy is in a stage 3 stagflation potential environment. So the Fed by lowering by 50 basis points, you had the producer, the PCE index, so inflationary environment for the Fed, which came in, ticked up a little bit, but is below expectations. So you're looking at an inflation rate of around 2.2% on that indicator. So you're seeing inflation kind of come down. You're seeing growth, unfortunately, come down. But this Fed interjection is giving the world the at soon to be inflation possibly ticking up in the next couple months, and eventually later, in theory, next year, you're going to see growth ticking back up. It's a really good potential environment for commodities. So we own gold, silver's doing well, oil and natural gas. Natural gas is coming back. We did add something. So I want to talk about what we added, and I'm going to show you Bitcoin. We didn't buy this particular ticker, but this ticker by the Grayscale company has been out for the longest. It's the fees are way high because people are trapped in this thing with huge capital gains and they didn't lower their expense ratio. So we move into lower cost investments. So I want to share with you. So obviously the Bitcoin Trust ETF, we've had a couple of Bitcoin trades this year. I would simply say that so far, net, we're positive, but our last Bitcoin trade was not positive. But you can see this red area where we got hit hard. But it did have a gas on 9/13, another gas signal on 9/17, and off it runs. And we've been in this. We picked up IBIT, again, the lower expense ratio ETF. But IBIT is the iShares Bitcoin spot ETF product. It hasn't been around very long, so you'll see the short-term trend is up. The long-term trend is no data because it hasn't been around very long. But we picked it up 3 days ago at 35, and now it's sitting at almost 38. So obviously nothing's perfect, but in a perfect world, we would make 5% in 3 days. That would be incredible because we're following trends in this capacity. So commodities, so is Bitcoin a commodity? Is it a currency? I don't see anyone paying for anything in Bitcoin, but I think of it kind of in the same realm as gold and silver. There's a finite amount. It's in theory a store of value. It's If everyone loves it, it's great. If everyone hates it, it's troubling. That's why we follow trends. So IBIT could be very productive investment, or Bitcoin could be a very productive investment as stimulus is hitting the world. So IBIT, we own it in level two. So far, off to a great start. Still on a gas signal as of today. Other things that were really had my attention. So this is more volatile. This is less traded, but this really has my attention. And it's on our watch lists on the live sheet. You have platinum and palladium. I'll talk more about this next week as long as everything goes as planned, but I don't own it. I'm definitely watching it. So PALL, Physical Palladium Shares ETF. This is a monthly chart from the website FinViz. It's interesting. I mean, it's obviously this has been a disaster, but if you've been a member for a long time, the opportunities come from politely past disasters. So it hit in theory a high of the high 200s. We're looking at a price point of $95. It's holding that support from the 2018 lows. You can see my orange or yellow support line that I drew. You're seeing things like volume coming in. You're seeing support down here. You're definitely seeing this area as a support. So okay, so what's your risk? So somewhere in the neighborhood of mid 80s is your support. But if this thing starts to really cook, look, that's opportunity. I mean, from 100 to 200, there's a one bagger. Could it get to a two bagger? It's possible. So again, obviously there's risk, and obviously I don't know the future, but we're going to follow the trends. It went from a choppy environment, and now you got your U-turn to a gas on a nice jump, and it's consolidating nicely sideways, which is really nice. So overheat, that's why we wait. And look at that. After the overheat, it kind of pulls in and it's forming a gas signal again, and maybe it's making another run higher. So we'll look at commodities. We'll do some themes. I'll try to make these videos as entertaining and hopefully productive as possible. But again, I can't thank you enough for let's do that for being a member. I hope you had a really good week. Again, we have a lot to do. I'll be on the live sheet. We have the $1 billion fund manager analysis right around the corner for the month of October, Q4. Again, thank you for your time. I hope you have a really great Friday weekend. And if you have questions, I'll put in my email on video days for you to submit your questions through like a Google form. So you'll give us some topics if you find them that they would help you, because nothing would help me more than kind of providing our hopefully our research to help you and save you time and give you good ideas. All right. Thank you again. Enjoy your weekend. Talk soon. Bye-bye.